Hello and welcome. You tune into Your Trades with me, Ankita Saxena, and with me is Mansi Dave. In the next half an hour, we'll take you through how the markets shaped up at today's trading session and what are the important cues to watch out for in tomorrow's session. But first up, today's market session, Mansi, another lackluster day coming in. We are very range bound. In fact, today also we managed whatever gains we had yesterday in yesterday's trading session. We have pared all those gains, and in fact, we have not even managed to touch 24,650 levels on the Nifty.
Yeah, Ankita, I was thinking what a hopeful session was yesterday, and today we were quite volatile, and all of those gains were given up, and the markets were really volatile, be it the benchmarks or the broader markets. Now you see the top news that made news flows an impact during the session. It was a lackluster momentum, and yes, Nifty did trade near 24,600, and while we closed, it was around 24,649 to be precise. So 24,650, and even below that is where we closed. Yesterday was a session where we did see 24,700 mark. Not that during the session today also we didn't see that mark, but then we closed on the lower levels at the same time. Talking about the news flows, Gland Pharma was in focus on the back of the stake sale which came in, and it was a news coming in from the sources as Fortune's Gland Pharma stake sale was another news flow which made news during the session. Street did cheer Rajiv Anand as Indusin, the MD and CEO. After the announcement, the stock was really trading in green even in the volatile and weaker markets during the session. Now, PB Balaji is named as JLR's first Indian CEO. That was another important news flow which was doing the rounds on the exchanges during the session. And Paytm, of course, even before the market opened, we did tell you that 5,700 crore block and Fin was likely to be the seller. And on the back of that, we did see volatile moves in the stock price of Paytm as well. Is eyeing diversifying rare earth imports, and a very important development which is coming in, and we want to reduce the dependency from the other countries, and that's the reason it was an 18-hour exclusive which we did flash, and we also did tell you all the important rationale behind it. But this was another one, and we'll keep you updated about all the latest developments that comes on the way on the same. But the biggest event and trigger for tomorrow also, the RBI Monetary Policy Committee 3-day meeting is on the way, and tomorrow, Ankita, is the credit policy. So the market will be divided into two halves, maybe before the policy and the after policy.
Absolutely, Mansi. Tomorrow, the main important thing is the MPC meet, and because there is a divided opinion on whether they will be maintaining a status quo or some pocket of the market that feels that there should be a 25 bits rate cut. So it's a divided house. So that's something that we'll be watching out for. But for now, let's get on board. Ajit Mishra, the SVP of Research Religare Broking, who's joining us to weigh in on the markets. Hi, Ajit. Good afternoon to you, and thank you so much for joining us. Ajit, yet another lackluster day of trade. In fact, we are very, very range bound. There are no positive triggers. But what are the levels that you're watching out for on Nifty and Nifty Bank?
Yeah, good afternoon, Ankita. Good afternoon, Mansi. So yes, Ankita, this is not new. Means from last 5 weeks, we are seeing this trend continuing. Means the first 3 sessions of the week, largely they are lackluster, a dull move, volatile swings, something which continues. And then in the final session, Thursday, Friday, the negative trend resumes. So on a similar line, means yesterday it was an up session. Today we have surrendered all the gains. So the good part is for the bulls that we are trading around the medium-term moving average 100 EMA, which is placed around 24,600 mark. We have put writers also very aggressive at this level. So somehow we are trying to defend this level, but upside still I feel that we have multiple resistances to cross. Means the first hurdle comes around 24,100, and once we cross that, 25,000. So as of now, the bias is still on the negative side. It's just that we are taking a breather every now and then. But one should not jump into a trade basis on a single day bounce like what I have shared earlier also. One should wait for a decisive close above 24,800 for any meaningful recovery towards 25,000. And in case if we slip below 24,600, then 450 is something that we are eyeing in the bank Nifty index. Banking, on the other hand, we are seeing gradual drift because earlier we were seeing that SDFC and ICICI, they were holding strong, which was keeping the banking index above the short-term averages. But from the last 4-5 trading sessions, we are seeing gradual drift. So here also we are very close to the immediate support zone, which is around 54,900 mark. So that's critical. In case there will be any bounce, 56,000, 56,400 will be the area where banking is going to face resistance. So as of now, for banking, also one should wait for any fresh buying opportunity. Means any dip, let's say 54,900. That's the area basically where one can look to attempt a rebound trade. for 56,000 as the immediate target.
So this is the view on the indices. Both Nifty as well as Bank Nifty did see a lot of volatility throughout the session. Najit, good afternoon. What will be the trading ideas for the session next?
Right, Mansi. So, see, amid all this negativity, we are still seeing, stocks from across pockets wherein there's a consistency, there's strength. They are trading at the record highs. So, one name from the auto basket, M&M. So, it's been almost 2-3 months of consolidation, and now we are seeing sign of trend resumption. So, stock is anyways trading closer to its record high. So, it's more of a time-based correction that the stock is currently experiencing. And we expect this to end soon. And 33.20 is something that we are eyeing. So with stop at 31.60, one can accumulate M&M at current levels. Another stock from the metal basket, though we are seeing volatility in the metal pack, but here the recovery is swift. And those who are okay with taking slightly higher risk, they can consider this stock for long trades. Jindal Steel, wherein we are seeing outperformance on every uptick. And 1040 is what we are eyeing in the near future. So with stop at 980, one can accumulate Jindal Steel also at current levels.
Right, so two picks there, two bullish calls coming in on M&M and Jindal Steel. On that note, Ajit, thank you so much for taking the time out and joining us today. But let's go across to my colleague Shrishti, who's standing by with the technical charts of breakouts and breakdowns. Shrishti, tell us, what are you seeing today, breakdowns or breakouts?
Well, two counters, one on the breakout and the other one on the breakout side. Firstly, let's talk about the breakout stock, and that is one of the top gainers on the F&O side, Chambal Fertilizers. A very strong move in today's trading session and very interesting moves on the chart pattern as well, because if you look at the stock price, the stock has been consolidating in a tight range for quite some time now. Well, of course, in the past 2 days, of an up move, but today's trading candle of more than 7 to 8% jump was quite interesting to see, because the stock managed to move above its key resistance of 560 rupees. Not just that, if you have a closer look, the stock has now managed to break above its 20-day moving average in a decisive manner, and hence we thought of spotting this stock, or highlighting this stock rather, as a breakout candidate. But on the flip side, the breakdown stock, let's talk about that, and that is BSC on the charts, because if you look at the stock pattern, yes, of course, the stock has been on a continuous uptrend, but off late that seems to be shifting. Today, of course, we have seen a bearish engulfing on this particular stock. A rejection exactly from its 20-day moving average is what we are seeing, and along with that, the stock is seen to be retesting its previous session lows as well, and hence we thought of highlighting this stock as the breakdown candidate. So these are the two stocks for today. Back to you.
Thanks for that, Shrishti. Two stocks coming our way. Fertilizer sector was doing positive rounds during the session, and Chambal Fertilizer, yes, was topping the list. And at the same time, exchange ancillaries took a downside, and BSE Limited was tanking down in the trade. Moving ahead, Pankaj Murarka, CIO Renaissance Investment Manager, continues to be positive on financials, and from within the space, he says that he is geared towards large cap banks. Listen in to understand his rationale.
View on banks remains positive. I think NIM compression is a transitory thing and it's a cyclical thing. Whenever we will have rate cuts, obviously the way the sector regulations or RBI has regulated the sector, your assets gets repriced much faster than your liabilities, because your liabilities are long duration. So this is a cyclical thing that in a rate cut environment, banks will have some NIM compression, in a rising rate environment, they will get benefit of expansion in NIMs. What we really like is banks with strong liability franchise and pristine asset quality. And it's very clear now that the larger banks have an advantage over smaller banks. So clearly we like the larger banks. In fact, we own 4 of the top 5 large banks now in our portfolios, including HDFC, ICICI, Kotak, and State Bank. One thing which has been holding back the sector, apart from the cyclical issues of NIMs compression, is slower loan growth. And I think probably as the economy recovers in the second half of the year, probably we'll see recovery in loan growth as well in banks.
All right, moving on to a counter that was in focus today, and IndusInd Bank that was in focus, because the wait for IndusInd Bank's new MD and CEO is now over, as the lender informed the exchanges that the appointment of Rajiv Anand, who will be taking charge later this month for the tenure of the next 3 years. But this is subject to shareholders' approval. Ankur Mishra is joining in with more details of that. But it was clearly buoying the sentiment for the counter. That stock closed up almost 1.8% in the trading session today. But Ankur, take us through the details of this new appointment.
Reserve Bank of India has given go-ahead for appointment of Rajiv Anand as MD and CEO of IndusInd Bank, and after that, even IndusInd Bank board met late night on Monday, and an approval has been given for the same, subject to the approval of shareholders on the same. Remember, Rajiv Anand was one of the three names which was sent to Reserve Bank of India as MD and CEO of IndusInd Bank, and all this process started ever since there were problems in the derivatives accounting of IndusInd Bank, and the former MD and CEO of IndusInd Bank had resigned, and even after that a committee was formed for looking out for the next MD and CEO role, and we understand that Rajiv Anand was selected for the same. Remember, Rajiv Anand was currently a deputy MD in Axis Bank, and importantly he has taken an important position in Axis Bank regarding the digital banking portfolio. Although he was DMD in Axis Bank, he had also led the wholesale banking business and was also driving the overall digital banking agenda, and especially during the COVID times, he had worked regarding the wholesale portfolio, the mid segment, where the bank actually led a huge growth during that time. So now Axis Bank's deputy MD Rajiv Anand will be MD and CEO of IndusInd Bank, and he will be assuming the charge on or after 25th of August, and finally shareholders will have to approve this appointment.
That's right. And as the new era begins for IndusInd Bank under Rajiv Anand, who is appointed as the new MD and CEO for 3 years, what will the investor sentiment be like, and how will the bank augur under his leadership? To get an idea about this, we caught up with former MD and CEO of Axis Bank, Shikhar Sharma. Listen in.
I think ultimately, as far as investors are concerned, they will respond, I guess, in the moment, and that's always hard to predict. But what I'm confident about is that Rajiv will set clear goals, and those goals will probably be ambitious but realistic, and move towards them. And as investors see that delivery happening, that's what's going to bring the confidence and get investors back. So when the turn happens is always hard to predict. Sometimes investors will move very quickly, sometimes they'll take their time. But what I'm confident about is that with Rajiv at the helm, you're likely to have very few missteps, but you're likely to see the bank leverage its current strengths, but get ready for where the big opportunities are tomorrow. And I'm sure Rajiv will get that mix right.
All right, let's move on to an ET Now exclusive then. The biggest M&A deal so far for 2025 in India's drug industry is deadlocked. Medical injectables firm Gland Pharma has secured an interest from 3 potential buyers, Blackstone, Brookfield and EQT, to acquire Chinese conglomerate Fosun's majority holding in the company. Now, however, the deal is on hold over differences about the valuation, especially following a surge in Gland's share price since the end of April. My colleague Anurag Joshi is joining in with the details of the deal.
Chinese conglomerate Fosun's plan to sell its majority equity stake in drug maker and injectable company Gland Pharma is deadlocked. Gland Pharma had secured interest from 3 investors, Blackstone, Brookfield and EQT, but their interest in the deal has now waned over valuation issues. The deal's progress has slowed following a surge in Gland Pharma's share price since April, and that's acted as a dampener for the deal to go through. And these differences are over the perception, over the valuation of the company. Now, Gland Pharma shares have surged by about 39%. This is since end of April. The 3 investors had evaluated the possibility of an acquisition of owner Fosun's majority stake in the company. Fosun had agreed to acquire a 74% equity stake in Gland Pharma for $1.09 billion in 2017. Fosun is controlled by Chinese billionaire Guo Guochang and is currently owning a 52% equity stake in Gland Pharma. And a potential deal will cost the successful acquirer at least 16,700 crore rupees, and the successful bidder will also have to make an open offer for an additional 26% of the total shareholding of Gland Pharma if a deal goes through.
Absolutely, Anurag. Thank you for all of those details. Let's quickly go across to Ravinder and understand what were the stocks and news during the trading session on the exchanges today. Ravinder.
Well, as Angel One was in focus in today's trading session, where company has announced the monthly business update, and the company's gross client acquisition was down by approx 44% year-on-year basis. And if we talk about average daily volumes order, it was also down by more than 31% year-on-year basis. So back of this, Angel One was in focus. Apart from this, Castrol India is also in focus, where company has announced their Q2 CY25 number, and the company's revenue saw an uptick of more than 7% year-on-year basis. And if we talk about net profit, the net profit also saw an uptick of more than 5% year-on-year basis, and EBITDA margin also saw an uptick of 28 basis point year-on-year basis from 23.1% to 23.4%. Apart from this, Triveni were also in focus, where companies reported a weak set of Q1 number. Company's net profit saw a decline of 19.5% year-on-year basis at rupees 65 crore as compared to 80 crore. And if we talk about EBITDA and EBITDA margin, then both was down, and EBITDA margin was down by over 80 basis point year-on-year basis at 19.8%. Apart from this, MTAR Technology is also in focus, where company's revenue grew by more than 22% year-on-year basis at 157 crore, and net profit also saw a good jump from 4 crore to 11 crore, and EBITDA margin saw an uptick of EBITDA margin reported company at 18.1% as compared to 12.9% year-on-year basis. And lastly, ABB India were also in focus in today's trading session, where brokerages has covered with their note, and Nuvama has downgraded the stock to hold from buy rating and cut target price rupees 5,400 as compared to earlier target price rupees 6,650. And Motilal Oswal has maintained the buy rating and cut target price rupees 6,000 as compared to earlier target price rupees 6,700, and has also maintained the buy rating with target price cut to 5,863. So back of this, ABB India were also in focus.
Right, so these were the stocks that were in focus. But for tomorrow, what are the cues that you need to keep on our radar? Of course, because besides the big MPC meet outcome, what are the other cues to watch out for? Let's go across to my colleague Snehi, who's standing by to tell us more. Over to you, Snehi.
Well, yes, lots of cues to watch out for, but most importantly, all eyes are going to be on the RBI MPC outcome and RBI Governor Mr. Malhotra's speech that follows after that. Any commentary, any outlook on stance, inflation estimates, GDP estimates, all of these are going to be very closely watched out for. So that's the biggest cue that we will be tracking. Other than that, globally from Eurozone, you have retail sales numbers, so watch out for that as well. In terms of global earnings, some major companies are going to be coming out with their earnings, the likes of Honda from autos, Novo Nordisk from the pharma space, Disney, McDonald's, Shopify. Lots of companies will be coming out with their earnings. But in terms of earnings back home, you have three Nifty companies coming out with their numbers. That's Hero MotoCorp, Bajaj Auto, as well as Trent. But from the broader end of the market as well, a whole host of stocks like Blue Star, Bharat Forge, Rights, Godrej Agrovet, Jindal Stainless, Fortis Health, Ircon International, and so many other companies will be coming out with their earnings. So watch out for all of these stocks. In terms of annual general meetings, you have Godrej Agrovet, Pidilite, Blue Star, and Birlasoft that will be having their AGMs tomorrow. So any important commentary on this front will also be key to watch out for. And lastly, in terms of corporate action and board meetings, all eyes are going to be on Fortis Healthcare. The board is going to be mulling changes to its existing NCD holders' rights. So that is going to be important to watch out for. Pidilite board is going to be mulling bonus issue along with their Q1 earnings as well as their AGM. Ramco Cement and Coal India will be trading ex-dividend, and it's also going to be the last day to buy the shares of Karur Vyasa Bank to be eligible for dividends. So watch out for all of these cues, all of them very important to track.
Well, Bajaj Auto is set to announce its quarterly numbers. Let's go across to Shrishti to understand what the street is penciling in from the results. Shrishti, what should one expect from the numbers of Bajaj Auto?
So this time around, when it comes to Bajaj Auto numbers, the volume growth was absolutely flat on a sequential as well as on a YY basis. But there was a change in the mix of the company. When it comes to that mix, then it was the two-wheeler sales that actually remained flat on a YY basis. But the domestic volumes have actually declined 8% on a YY basis. And in that as well, the three-wheeler sales has actually shot up 7.5% on a YY basis. But overall, if we look at the contribution of the two-wheelers in their export, that contribution has now fell to 38% from 40% back in Q4. So all of these factors will impact the margin and the other numbers of the company. Let's talk about that. And firstly, on the revenue front, 12,244 crores is what we are penciling in. EBITDA to show a decline of 2% on a YY basis. 2,359 crores is our expectation, but the key to watch out will be the margin. 19.3% is our expectation, and that will be a fall on a YY as well as on a sequential basis. And lastly, on the profit figure, we are anticipating a number close to 2,000 crores. But along with that, if you look at the other factors that will impact the numbers of the company, that given the weak demand, adverse mix, the currency headwinds might also impact the overall performance of the company. But going ahead, all eyes will be on the management commentary when it comes to the demand profile, as well as going ahead, how are they planning the new product launches. All of these things will be the key to watch out for.
All right, so that's what we are expecting as far as Bajaj Auto is concerned. But Trent is also in focus on the back of muted expectations for the first quarter earnings. Higher mix of Zudio could weigh on the margins, and my colleague Snehi is joining us with the more on what can we expect from the numbers for Trent. Over to you, Snehi.
Well, yes, all eyes are going to be on Trent earnings, and all in all, we're expecting a weak quarter this time for quarter one from Trent. This is exactly what the management had guided, and remember, when the quarter one update was out by the company, the stock had fallen 12% that day because the update for quarter one was also quite weak. On a standalone year-on-year basis, based on the company's update, the revenue is seen at 5,061 crores compared to 4,228 crores, which is an uptick of just 20%. Remember, Trent historically has seen their revenue go up anywhere between 40 and 60%, so 20% uptick now seems rather nominal. The EBITDA is seen at 730 crore rupees compared to 611 crores, which is up 19.5% year on year. For profitability, for net profit, we're seeing this number at 390 crores compared to 342 crores, which is up 14% on a year-on-year basis. Margins, however, are seen to be slightly under pressure at 15.1% compared to 15.3%. Now, some important expectations. The revenue growth is seen moderating at 20% year-on-year, despite a roughly 30% year-on-year store addition done by the company, which means, and this could imply that the same store sales growth could be under pressure this time around. EBITDA margins are expected to contract due to gross margin contraction led by higher mix from Zudio. Management in its AGM this time around had said that the core fashion is expected to report roughly 20% growth in quarter one, which is much lower than its historical levels. Westside and Zudio have added 0, so no stores for Westside, and Zudio has added 1 net store on a sequential basis. And lastly, revenue per square foot is expected to decline anywhere between 5.5% and 6% on a sequential basis. When the numbers do come out, all eyes are going to be on the same store sales growth, demand outlook in metros, tier 2 and 3 cities, outlook on the festive season that's just upcoming, and store expansion guidance given by the management. So all eyes are going to be on Trent's quarter one, but well, yes, overall we're expecting a weak set.
Set expected from Trent. We'll keep an eye on that and also give you the reviews of the same. Well, on that note, we wrap up this segment of Your Trades, but there's a lot lined up on the other side, so you stay tuned with ET Now. Thank you.